So let's talk about margin. Tesla itself has engaged in a price war that's hit margins. Do you believe this might be the bottom when it comes to its margin story?
Yes, so that's one of the issues in yesterday's call. The company wouldn't commit. They were very non-committal about seeing a bottoming in margins. We think we're there, so whether it's this quarter or next quarter, they broke this 20% pure gross margin guidance, and right now they're in about the 17% range, and I think that's probably why they don't want to commit to this being a bottom. But if you look forward into Q4, into 2024, we have the Cybertruck ramping, we have additional volumes helping growth, we have 4680 cells ramping, so we think that this particular level probably represents the bottoming process for gross margins.
Tesla stock is one of the most followed in the stock market, and that's not even a surprise given the shares of the automaker and how well they've performed over the longer term. Tesla is one of the biggest companies in the world, and it's going to continue to be so for years to come. Anyone bearish on Tesla right now may not be fully aware of what type of company this is and how effective Tesla's business model is. Therefore, anyone who wants to invest in Tesla has got to understand the massiveness of this company. Only then can you truly decide if it is worth your investment. In this video, we're going to evaluate Tesla's business model and how this will be a big deal for Tesla stock. So stay with us as we take you through the details.
Tesla, after a strong start to the year, didn't raise its vehicle delivery guidance from 1.8 million. Is that the only thing weighing on the stock?
Look, what we saw last night in results was emblematic of a company that's investing to create long-term durable growth. And they're doing that in multiple ways, right? So first, they cut prices, which you referred to earlier in the year, and that's seeding the market with units. And with those units over time, they hope to basically penetrate FSD software that will create margin upside over time. They're also spending a lot in OpEx. They're doing that to beef up their AI infrastructure, to enhance that FSD offering, maybe even sell, they alluded to this yesterday on yesterday's call, to sell more FSD software to other OEMs.
So, George, I want to jump in. FSD is full self-driving. I just want to make sure the audience is on the same page with you.
Sorry, yeah, full self-driving software for its own vehicles and potentially to other OEMs. They're also investing in battery technology with 4680 cells. They're also investing in robotics, right? The Tesla bot could create long-term durable growth, for later on in the decade and into the 2030s. So this is a company that, despite an erratic macroeconomic environment, is still putting the pedal to the metal and investing in projects that should create growth for the long term.
At the end of 2020, Tesla delivered about 500,000 vehicles, and its net income for the full year at $903 million was nothing to stick a nose up at. Only a few would have predicted that by 2023, Tesla will deliver almost the same number of cars in just one quarter. Tesla's second quarter deliveries came in at 466,000. Even more, net income came in at $2.7 billion for the 3 months, dwarfing Tesla's annual income just a few years ago. Sure, many will dwell on the fact that Tesla had to significantly reduce the prices of its vehicles this year to aid with sales growth in the face of rising interest rates. But when investors zoom out a few years, it's easier to appreciate the magic of what Tesla's done and all it's achieved so far. Hey guys, welcome back to Tesla Tomorrow. Tesla is a company that is well known for its exciting lineup of products and business model, which has proven to be a huge success over the years. The company's established itself in several business sectors, reporting impressive numbers in revenue quarter after quarter. This diversity in Tesla's business model has been a major driver of its growth, and if you look at it, Tesla has not only succeeded at being an EV manufacturer, but it's made significant gains from energy, FSD, insurance, and even superchargers. All this make up Tesla's valuation, and will collectively send Tesla stock to a whole new level in the future. How will this happen though? Let's find out. But before we do, if you like this type of content, hit that like button, subscribe, and ring that notification bell to keep up to date on everything going on with Tesla. In 2011, Tesla stated its aim of becoming the most compelling car company of the 21st century, while accelerating the world's transition to electric vehicles. At the time, it was easy to dismiss as just something a bit weird, or a mere premise. But what Tesla has done in these years has been absolutely incredible. In all the years since its founding in 2003, Tesla's manufactured several groundbreaking cars, with some yet to even hit the road. For instance, Tesla's crossover with the Model Y became the best-selling vehicle worldwide in the first quarter of 2023, and Elon Musk said the Cybertruck will be the best vehicle Tesla has ever made. Tesla looks after its own manufacturing, the repairs, as well as the insurance of its cars, since it has every incentive to make these cars simpler and cheaper. For most Tesla investors, EV sales are the headline numbers of a car company when it comes to its balance sheet. But if EVs and Elon Musk are to be believed as being a true thing of the future, another part of Tesla's business model could account then for a significant chunk of its products and its profits. For instance, Tesla has its own insurance business, which is also thriving. According to Elon Musk, Tesla is looking to offer insurance nationwide and eventually internationally on its vehicles. The Tesla CEO said this during the company's annual shareholders meeting. Aside from generating revenues for its businesses then, providing auto insurance to consumers helps Tesla solve two problems. First, it reduces the overall cost of insurance for Tesla vehicles. And second, Tesla's insurance business could also boost sales of its cars by reducing the overall cost of ownership. Similarly, while Tesla's flagship EV segment has generated a large percentage of the automaker's revenue, the energy generation and storage segment has also contributed significantly to its margins. This fast-growing business deserves more attention because it's on track to continue to account for a larger percentage of Tesla's overall sales and profits. And there's also the supercharger network. After Ford adopted Tesla's North American charging standard, several other car companies followed suit. Nissan recently announced it was reaching an agreement with Tesla to adopt the North American charging standard beginning in 2025, providing Nissan customers even more choices when it comes to charging their vehicles. Just like other companies, in 2024, Nissan will provide an adapter for its owners and their EVs who have a CCS charging port. Once 2025 hits, new Ariya SUVs will come with the NACS outlet built in. The same goes for EV buyers in the United States and Canada. According to the company, this move will make charging on the Tesla supercharger network seamless and convenient for drivers, significantly increasing the number of public fast charging locations at which Nissan EVs can be charged. Do the bears even realize how big this is? We doubt they do. For one, Nissan has long committed to the CHAdeMO fast charging standard, and then finally gave up on it with the Ariya SUVs because nearly everyone else in the industry switched to CCS. Therefore, for Nissan to consider switching to the NACS Tesla platform, then there's got to be something unique about it. Let's talk about earnings. According to its recent earnings call, Tesla's revenue from its core automotive business rose 46% year-over-year to $21.27 billion, about a 6.5% increase sequentially. Its energy generation and storage revenue is majorly from solar installations and backup batteries, which rose 74% year-over-year. Tesla's R&D costs rose to $943 million from $771 million in the first quarter, with the company writing in a shareholder deck that it is focusing on being at the forefront of AI tech and development, and has started production of its Dojo, its training computer. Likewise, the automaker made around $2.15 billion from services including fees for out-of-warranty vehicle repairs. This only means one thing, and there's still more revenue yet to be made by Tesla. Tesla is one of the most successful automobile companies out there, and it's certain that Elon Musk and his team are working hard to provide newer means of transportation and also newer sources of income. And we're going to be watching. But what do you think about Tesla? Let us know your valuation down below, and if you want to know more about what Tesla's been up to over the last few days, go ahead and click on this next video on your screen. See you there.